What is up, you guys? It's Nick back here again with another video. In this video, I'm going to be talking about one of the most requested companies I've had in the comments as of late. A very interesting company with a unique approach and rapidly stealing up that market share. Like a lot of my favorite companies, they are well situated within the disruptor category, making crazy moves, aggressively expanding, and they are willing to take risks. You already know who I'm talking about from the title. It's the Chinese electric vehicle automaker XPENG. So let's get right after it. I'll be covering everything you need to know about this company, their ins and outs, their strengths, their weaknesses, their revenue, and what their share price could look like in a few months' time. Make sure to watch the whole video to gain a grasp on what this company stands for, how they're planning on expanding, and their future business operations, to then more aptly be able to make your own conclusions of whether you want to add XPENG to your portfolio. Alright, so XPENG is a Chinese electric vehicle automaker founded in 2014 based out of China with offices in Mountain View, California, which may actually signify future North American and European expansion in the coming years. They are traded on the New York Stock Exchange under ticker symbol XPEV and debuted on August 27th, just 2 months ago. They actually opened at 23.1, but this relatively high debut was to be predicted and actually coincided with a few other events that drove up the steep price. XPENG premiered its first vehicle in late 2018, the G3, which is sleek and a snazzy SUV. Yes, snazzy. Don't at me. Tell me this isn't one of the finest SUV crossovers your eyes have ever laid eyes on. I absolutely love it. It has a range of over 400 kilometers with a longer battery range option of 520 kilometers. They also have one of my favorite electric vehicle sedans, the P7. This futuristic, balling vehicle just started delivering on just June 29th, 2020 and has been received extremely well with the Chinese public. What really makes this particular vehicle interesting is its self-driving capacity with its software supporting L3 level automatic driving, which is essentially the level of driving where you could, watch a movie, read a book, keep your eyes away from the road while your vehicle takes you to your destination. The P3 also supports a range of up to 700 kilometers on just one charge. This is really driving the change in electric vehicles. XPENG has been quickly raising a ton of cash. In November 2019, in their third round of fundraising, they rose 400 million, followed by 500 million in July 2020. Then Alibaba investors, Abu Dhabi's wealth fund, jumped in August 2020 for another 400 million, and finally XPENG slammed it out of the park with a $1.5 billion IPO. This brings us to a current market cap of 14.869 billion. Not bad for a company that started just 6 years ago. It's important to note that they do have government funding, so take that as you will. This is a lot of money flowing into this company, and when we see more liquidity in the early years of a company, we tend to see that rapid growth at an accelerating pace, as they are well aware they have to quickly gain a foothold and gain up some market share. Alright, going into their balance sheet, we see an astronomical gain in revenue over the course of 1 year. In 2019, XPENG generated 2.3 billion won, equating to about $345 million USD. Their cost in revenue is extremely high, really chewing into any potential profits, which at this point in their business lifespan is absolutely no reason for concern. Startup companies, especially electric vehicle companies, work to rapidly expand and grow their businesses while worrying about becoming profitable, down the line. They're really focusing on allocating a large sum of their cash and cash equivalents to R&D, research and development, just over 2 billion won. In 2019, they posted negative 3.69 billion won, or a loss of about $536 million USD. I know this sounds like a lot, and it is, but this really should be expected. They are a startup electric vehicle company. This is gonna happen. Alright, getting into the fun stuff. XPENG in a relatively very short time has jumped into mainstream markets. I think this catalyst was a mixture of things. Primarily their deliveries of the P7 coinciding with the auto market recovery within mainland China, the intense promise of future demand for electric vehicles, and the extension expansion of the Chinese subsidy programs. XPENG saw a monthly delivery record in the month of September, delivering 3,478 vehicles, representing a 31% increase from just the previous month. This was also a 145% year-over-year gain. This is an incredible number of deliveries to be reaching within the very short lifespan so far. The newer P7 sedan is heavily favored currently, with 2,573 of the sales, while the larger compact SUV posted 905. They delivered 8,578 vehicles in the third quarter of 2020, representing a whopping 266% increase year on year. We are seeing intense demand for the P7 sedan model, and they recently delivered their 10,000th unit on October 20th, having just begun deliveries just a few short months ago. This is a very compelling argument for XPENG. Customers are clearly loving the product and actively buying units at an increasing pace. Now, what is very interesting about this company and sets them apart from opposing competitor companies such as NIO is that they are actually vertically integrated, owning their own production plant. As opposed to NIO, who outsources all of their manufacturing, XPENG has a current factory with the upper limit output production of 100,000 vehicles per year currently. This is really appealing as an investor, as it shows that they won't likely have any short-term supply chain issues, which would undoubtedly negatively impact their bottom line. They have also broken ground on an upcoming manufacturing plant, which will be finished in just over 2 years, showing that they are planning on becoming a firmly rooted and successful company within the next few years. If they already have 100,000 capacity and are currently upsizing, although this is very aggressive, what this is showing to investors is that this company believes in itself and believes that upscaling and aggressively expanding is the right play. They are leading the charge in autonomous driving and see this as a main selling point, drawing in customers looking for a more relaxing and safe driving experience. Alright, is this a time to get in? Earnings are currently forecasted at losing around 67 cents a share right now, which definitely isn't great, but it's a move in the right direction. 2021 sees them almost halving this to negative 37 cents per share, which I would not be surprised if they were able to beat, as they are rapidly growing and consumer interest in electric vehicles right now is really at all-time highs. They are expecting to more than double revenue next year to 1.95 billion USD in average estimate, which highlights how analysts think this company will rapidly expand and be able to generate vast amounts of income. They have an average price target well above their current price and are sitting at a 1.8 between a strong buy and a buy. Let's get to the share price chart history. They're currently sitting at 1962 USD per share, which is actually down from their IPO open over 9%. At the time this debuted on the exchange, Tesla was amidst an historic run-up leading up to its split, and people were gobbling up EV shares. So when this opened, I knew it would be astronomically high, so for that reason I let the dust settle and for the FOMO to slow down. However, their share price hasn't dropped nearly as much as I thought it would. What's preventing it from going down, this resistance, is actually a good thing. It's their high delivery numbers, pollution concerns, government subsidies, and consumers fundamentally shifting to an electric vehicle mindset. Without all this future promise, we likely would have seen a much sharper correction take place after the IPO. The past 5 trading days have seen almost a 3% loss, and if this stock can come back down to around the $15 or $16 mark, I will definitely be buying bulk in for the long term. I'm strictly a long-term investor, and I do see intense upside with this company. XPENG is a company I will be covering more in the coming weeks and months, as they have really caught my eye as of late. So make sure to hit that subscribe button for all XPENG updates. Anyways, everyone, thanks so much for watching. I really do appreciate it. Thanks for all the support you've shown me. Let me know in the comments what you think about XPENG. Are you buying? Are you selling? What's your deal with this current valuation? Where's your price entry point, and what are you hoping to get out of this company? Also, let me know what companies you want me to analyze in future dates in the comments below. Thanks again, guys. I really do appreciate it. Smash that like button for the YouTube algorithm. It really helps out with the channel, helps the channel grow. I've got to get back to my pool game. I'm playing with nobody, and that I just put in for the sake of this video. All right, take care, guys. Cheers.